Welcome to Spotlight Business Report. I'm Richard Anton. Today, we're dissecting a retail titan that just crossed the $1 trillion market cap milestone, a company that's transforming from a big box store into a tech-powered ecosystem. Data-driven, fearless, fueled. This is the story of Walmart's evolution, from a rural five and dime to a global technology leader. We're going deep on the history, the tech, and whether it belongs in your portfolio. It all started with one man's vision in 1962. Sam Walton wasn't just a shopkeeper, he was a pioneer of efficiency. Before Rogers, Arkansas, he learned the trade operating Ben Franklin variety stores, but he wanted more. Rogers, Arkansas, July 2nd, 1962. Not exactly the center of the retail universe, but Walton saw opportunity in the underserved rural market where others saw only empty space and limited profit. His secret sauce: logistics. By clustering stores around centralized distribution hubs, he minimized delivery times and costs. This hub and spoke model allowed him to keep prices lower than anyone else. By 1970, Walmart went public. Shares traded for just $16.50. If you had the foresight to buy 100 shares then, you'd be sitting on a fortune today. It was the birth of a blue chip legend. In 1983, the company launched Sam's Club, a membership-based warehouse designed to compete with the likes of Price Club. It proved that Walmart could master more than just one retail format. The real game changer arrived in 1988, the Supercenter. By merging a full-scale grocery store with general merchandise, Walmart created a one-stop shop that fundamentally decimated local competition. International expansion soon followed. From Mexico City to Beijing, the everyday low-price philosophy became a global language, proving the model worked regardless of geography or culture. When Sam Walton passed in 1992, he left behind more than a company. He left a culture of servant leadership. Even today, with over 2 million associates, that customer-first mentality remains their backbone. But the Walmart of 2026 isn't just about massive parking lots and low-priced groceries. It is reinventing itself as a technology powerhouse, directly challenging Silicon Valley for digital supremacy. Look inside their latest fulfillment centers. Over half are now fully automated. We're talking about high-speed robotics and proprietary AI that predicts what you'll buy before you even know it yourself. E-commerce is no longer a side project. It's the primary engine of growth. Digital sales surged 27% this year alone, now making up nearly a quarter of their total US revenue. In a major 2026 move, Walmart partnered with Google to integrate Gemini-powered AI agents. It's an intuitive, conversational shopping experience that's light years ahead of a standard search bar. And then there's Walmart Plus, their answer to Amazon Prime. It's finally providing that sweet, recurring subscription revenue that investors love, and it's a key part of their omnichannel ecosystem. This massive tech pivot was championed by Doug McMillon, but the torch has now passed to John Furner. Furner is doubling down on this AI roadmap, steering the trillion-dollar ship toward total transformation. So, the million-dollar or trillion-dollar question: is Walmart a buy for your portfolio in 2026? Let's look at the cold, hard numbers that drive this retail giant. Walmart recently crossed the $1 trillion market cap threshold. For investors, this reclassifies the company. It's no longer just a defensive retailer, it's a growth stock with a retail footprint. Stability is in their DNA. As a certified dividend king, they've increased their payout for over 50 consecutive years. It's a rare combination of growth potential and reliable income. But a word of caution for the value hunters. At a trailing PE ratio of 48, The stock is historically expensive. You aren't just buying retail, you're paying a premium for that tech-driven future. They are spending billions on automation and tech infrastructure. The key metric to watch is return on invested capital. If those tech bets don't pay off in efficiency, that high valuation could be at risk. There are risks. As a global retailer, Walmart is highly sensitive to shifting trade policies and tariffs. Any disruption to international supply chains hits their bottom line directly and immediately. So, the verdict? Walmart offers low beta protection with significant AI upside. It's a foundational holding for many, but at current prices, patience on your entry might be your best investment strategy. From a small shop in Arkansas to the front lines of the AI revolution, Walmart remains the king of retail. I'm Richard Anton. Thanks for joining us for this edition of Spotlight Business Report.